Hey everybody, it's me in the attic office, and I'm looking at the flux solar cycles indicator for NinjaTrader 8, and I wanted to give you a brief synopsis of what we're doing here. Basically, I've been trying to understand the cause and effect relationship between natural forces, our environment, and the way markets move. Because when you go back and read the works of people like W.D. Gann, they're convinced, hyper convinced, that there's a direct correlation between the influences surrounding our physical environment and how we behave. And so in preceding videos, as I mentioned, alluded to this idea of the sun and the activity of the sun having direct correlation, contribution even to the rise and fall of the US economy. And we alluded to studies that have been done in the past with people who have been tracking when recessions and depressions took place, and how they're almost always on a solar high, and sometimes inverted in the middle of a solar low. Our last major recession in 2008, for example, was at the bottom of the sunspot cycle, and it was an inverted cycle, which inversions usually produce the largest moves. And Gann talks about that in his works. So we went back and we actually figured out what days, what day of the year the exact solar high took place and the exact solar low took place, as best as we could determine, going back into the 50s, because the data is available. Actually, they have solar data back into the 1800s. This is something scientists have been observing and recording for quite some time. So we developed that information and we logged it into a program. And so I want you to see real quick. There's a red dot over here where the last solar cycle high took place, and then way over here to the left is the last solar cycle low and where that took place. And so there's two things I want to teach you as we move into this, and we're going to be building layers as we go here. But the first two things that I want to teach you involve the closing price of the day that an important time-based event occurs. So Gann tells us that tops and bottoms will appear around the time if it's significant, but also that the resistance levels associated with that time will cause tops and bottoms to form. In fact, the exact thing that he said is a quote that I've referred to over and over again in my webinars, this idea of time forms peaks and time forms resistance levels, support levels that cause peaks. And so the first level that I want you to kind of recognize and acknowledge is what happens along the price line, the closing price of the solar minimum. And if you just look here where those blue circles are, you'll see that there's a resistive effect. The market comes down, bounces off of it, falls through, retraces off of it, comes down, comes back up, bounces, comes down, bounces off of it, and leaves. So this price was extremely relevant. I think it was around 1075. Well, the next solar maximum has a very similar effect, right? When the solar max took place, you'll see where that line was, and I want you to observe how price behaves in relation to that line, right? How it comes back and retests it and revisits it and bounces along it. And it's important here. I have it at 1759, and you'll see these bounces up here are occurring anywhere from 1765 up to 1777. So in an uptrend, it's not unusual after the first bounce for there to be misses as it climbs higher. There's a repulsion, but there's almost always that initial reaction and touch to it. So the first lesson in time involves this idea that time causes peaks. Time causes peaks and SR levels that have bounces. If you have the right time, you'll see the bounces that take place. So I've got these red and green dots right here, right? And so what I've done is I've created a 150% and a 200% extension of that gap. So 0% was the solar minimum, 100% was the solar maximum, and then we take a time extension of 200 and 150% off of those values. So just to show you what that was, I've done some construction here. I want to get rid of that so I don't confuse you. Those two yellow lines are the 150% extension of the solar min and max of the last cycle, and the 200% extension of the solar min and max. So when you're projecting forward, okay, ready? When projecting forward, 50% and 100% increments are prediction dates, and the cycles oscillate every 50%. So the way this law works, this law of vibration, in this case, in relation to the solar cycles, our last known maximum was here. Okay, so I'll put a red line there on top of that to enforce the idea that this was a time we were expecting selling pressure. The next line forward would be a green line because the signals oscillate. So we'll put a green here. And what I'm going to do, guys, is I'm going to just push it off to either side and copy it and paste it. And we're going to lock that there. With NinjaTrader 8, if you don't lock stuff down for some reason, it moves when you come back to get it. It's a really weird quirk of the new platform. Maybe it's a bug, I don't know. So I'm going to lock all these lines as I go. So what that essentially tells me now is if this was a red dot, the next signal is a green. So I'm going to come over here, and when I blow this date up, I'm going to unlock these lines first of all and just move them a little bit closer. I'll put them 2 bars to the left and 2 bars to the right. And I promise there's a payoff here when you see what the net effect is. So we'll go ahead and lock that. But now this bar right here is a green dot. So we'll go ahead and we'll put a green dot right there on the close of that bar. Now, that means the next signal off to the right is going to be a red one, right? So we'll come over here. We'll have our, and I'll just extend it over here to the right, and we'll make it red. And we know when we get to that signal, we're expecting selling pressure. Okay, so crunch it all up here. Red, green, red. Make sense so far? Autofocus. Done. Okay. Now, when we come into when we have an uptrend and we come into a selling pressure time, in In my Histogram Guidebook, I talk about, and I'll put a link to it in the description, I talk about how the market consolidates at a selling pressure time and then breaks out. And that resistance line becomes support in an uptrend. So in this case, we would be looking for a breakout of the line of the dot. In this case, if you were watching this cycle and wondering when it was safe to enter the trend, it would have been on the breakout above that dot. And we teach that on a 1 minute time frame, on a daily time frame. In this case, we're looking at months and years. But the concept is still the same. If we come below it and then we come back above it, that would have been a re-entry into the trend. And then if you want to extend that line all the way across, every time that candle, or that, yeah, exactly, every time that candle crossed that line and then came back over, was another re-entry into the trend. So there would have been an opportunity there. There would have been another opportunity here to go long again. And then there was another opportunity here and here to go long. So every one of these pullbacks that closed below, came over, and then crossed back over was another long entry, following the rules in the Histogram Guidebook. So that's the first thing I wanted you to see. We're going red, green, green, red, right? Well, I want you to see something else. And I didn't notice this until I just started working with the template again today. There's another law in time analysis, at least that I've come across, that says when you have no SR time levels above or below you, project the last gap. Okay, I call this is the sixth law of time resistance that I've developed. You might have different versions of this, I'm not sure. So in essence, what I'm going to do is I'm going to take these last two lines, and let me go ahead and stretch it out so I can be really accurate. I'm going to get it as close as I can. I'm going to draw a fib down here. You see what I'm doing? Okay, so I have this gap, right? Now watch what happens, and look where price is when I take this gap and I move it up 100% above where we are right now. Okay, so that level is 24.4250 on the Emini S&P. So let's go ahead and pull this out. And I'd like you to see what price does when it gets to 100% of the gap of the last known solar cycle high and low close. It creates time resistance. More importantly, it creates completion. That 100% gap has now been completed. Why is that important? Well, it's important because when there's completion in the market, there's usually two things that take place in regards to time. When we get to a level, an important time, there's sort of a ABC pattern that occurs. You have the initial surge up to that level, and then you have the stop run. This is almost always an exhaustion move driven by retail traders. The banks step aside and let retail traders exhaust themselves and puncture through. But I want you to keep in mind that this level in the ES, that 24.4250 or whatever it was, is going to be a magnet line for some time. You're going to see that level over and over again. In much the same way that you saw the red line down below get hit a couple times. But this is very important because there is now completion. 100% of that gap between the red line and the green line has been covered. All right. So I'm going to click on this line and hit lock because I want NinjaTrader to keep it there. What does this mean? Because it's all in the past. It's great to be in the past, right? We can always make wonderful observations, but I'm leading up to the point where predictions become possible. But I need you to have confidence in the predictions based off of the accuracy of what happened in the past. So I'm going to use another law of time that I've discovered works very well with this technique. And hopefully it'll spark some ideas with you. When you have your 50% extensions, you can divide the 50s into thirds with no maximum slice number. Let me show you what I mean by that. So here's the last solar maximum. I'm going to take this date now and I'm going to stretch the chart out, and now I'm going to put in another Fibonacci extension. Only this one is just going to be a retracement. Watch what I do. I'm going to draw these lines out, and it has a line at 33%, at 33.3% rather, and at 66.6%. And I'm just going to take it and snap it to my maximum date, and then I'm going to come over here and find my 150% extension, that yellow line, remember? And I'm going to snap it to there. So now I've taken that first gap between the 150% extension and the solar maximum, and I've divided it into thirds. Okay, do you see what I did there? Good. Now, the same technique applies with regards to colors. The last signal here was red, which makes the next signal what? That's right, green. So I'm going to come over here and grab a chart marker, and I'm going to lock it right there. So let's come here, it's locked. So this signal is green, which makes the next 66.7% line what? Green, red. I'm sorry, red, green. The next one's going to be what? Red. Exactly. So over here, I'm going to take a dot. I'm going to put it up. 18. Been doing 25 points. So 18 plus 20 plus 20 would be 40, about 45. Put it right there. And we're automating this process so you don't have to do it by hand like I'm doing it. But I actually like doing it by hand. I think it immerses you in the price action of the charts, and it's kind of teaching you something to do it by hand. So here we have that division now, red to green to red, right? And you'll notice that those dots are appearing at swing lows and swing highs. And all we've done is take the solar maximum and the 150% extension, and we've cut it into thirds. Okay? So that would be a primary, we'll call this a primary cycle. So the big cycle started here, ended here, and then the next big cycle kicks in over there. Okay, and we're nowhere near that, right? However, if we take this same technique and we split the 150-200% box into thirds, I think you'll be surprised by what you see, or at least it caused me concern. So I'm going to come here and get the time extensions, and we're going to do the same thing that we just did. I'm going to come over here and lock one side of my primary third split onto that yellow line, and then I'm going to come back and put the other side on the other yellow line. Matter of fact, we'll put it right there. And now I'll lock it. Now, check this out. Remember how I said the colors of the lines oscillate? So if this was a primary, I'm going to come over here now and put a red line just to the right of this as a secondary. So these are minor cycles in relation to the major cycle. So when we get to here, at this date in the future, over here in October, that's when we have another one of these big red circles coming. So we might as well go ahead and just put that up there right now. So now you start to see the predictive abilities of this. But it's constrained by a large gap right now, see? We have large gaps. So the first thing I want you to remember when we're doing this technique together is that we can start with large cycles and look for, especially with trend entries. Let's go ahead and put a moving average on here. We'll just put a simple EMA, and you know the one I use, right? Everybody knows. Whoops. It should be a 120 period EMA. Yep, there it is. We won't make it so crazy thick. Instead of 5, we'll just make it 1. So there's our 120 EMA. Trend is up. And we're looking for trend signals, right? So we're looking for green dots in the direction of the trend whenever possible. And so this would be an entry into the trend here back January 28th, 2015. This would have been an entry in the trend back here in November of 2016. And you can see one of two things happens at the major red cycles. Okay, now check it out. Potential number one is wicked consolidation with a breakout. So I'm going to come here and turn the opacity down to like 10% so you can still see it. Too much. There's 25%. We'll come up to 50%. There we go. So one of two things happens at a selling pressure signal in an uptrend. We have consolidation with a breakout and then a retracement to retest, or we have a major drop. So right here, that's from the dot down. So every one of these punctures above the dot would be a long entry in the direction of the trend. So if we were looking at that here, this would have been a potential long entry. This would have been a potential long entry. This would have been a potential long entry back. And then this in this area here. So all of these pokes above were places where you could put calls and try to get back into that trend. But in both of those cases, I want you to notice this pattern. Ready? Because we're coming into one next. There's a breakout. Let's keep this in draw mode, shall we? There's a breakout and then a return to the dot. Observe that pattern with me. And then over here, ready? A breakout, a return to the dot, a breakout, a return to the dot, a breakout, a return to the dot. So this happens in our 2015 cycle and it happens in our 2014 cycle. Okay? I want you to keep that in mind because it's happening again this October when we come into that area here. Now, let's get rid of these. That's the major cycles. The primary 50s and the primary thirds. Get rid of these drawing tools. I don't want to get rid of all my drawing objects, just these temporary construction lines that we drew here. Okay, so far so good. Sweet. Now, inside of the primary thirds, we can develop secondary thirds. Let me show you what I mean. So inside of this block, this particular third, and I'm going to go ahead and take my moving average back off. Let's add another another 33.3 and 66.6 extension. So I'm going to draw this out, but now this one, I'm going to make the lines a little thinner. And we'll make them a different color. Why don't we make, I don't know, medium turquoise, solid. We'll make them two ticks wide. And we'll do the same thing here. Medium turquoise, 2, and then solid. So now if I hit OK, see how the lines are different color here? That's going to help me keep track of what was a primary and what was a secondary. So I'm going to snap it to the lines of the primary third, and then I'm going to lock it. Okay, so do you remember the rule of colors? If the last color was a green, what's the next color? That's right, it's red. So for the secondaries, I'm going to use arrows. I'm going to put an arrow here, and that line would be red because this was green. And then the oscillation continues, and this candle here is green. So we have a block of 33 to 66% from the primary thirds. And now look at what's happening inside of that block when we split it into thirds again. So we can take this now, unlock it, copy it, and paste it. I'm going to move it over here because we're going to divide this block to the right into thirds. I'm going to relock this one. Come over here, and now let's divide this block into thirds. So I'll lock it to that primary third, and then I'm going to lock this one to my 150%. And now we lock that. So to do the next thing, I have to teach you a pattern. When we have a green dot that's a higher high, we assign a red arrow to it. So watch with me here in this next example. This dot was red, which means the next line, the sub-third of the third, the division of the primary third into a secondary thirds, would put the green dot right here, either on the candle here to the left or right of the blue line. We're going to zoom it in. But what I want you to see is that it's the highest high. And so the rule for this in my guide to the histograms, which is included in the description of this video, this is what we would call a pattern 5. Pattern 5 in our videos, in our classes, everywhere we teach this, we see 5s all over the place. So I'm going to put a green dot on this bar, but I'm going to put a red arrow. I'm going to put a green arrow underneath that bar, but 2 red arrows, because this is a pattern 5. Now watch this. Okay, there's my bar. So my arrow would have to go underneath the candle just to the left of it. it is a higher high. So the way the rules are for pattern 5, and you can go back and read them, this was a higher high, this was a higher high, and that was a higher high. So using cycles from 2008 and 2014, when we arrive at the projection of those cycles into 2016, the sub-third, the secondary third division, ends up being a substantial retracement. Now, if this is a green arrow, what's the next line supposed to be? The next line is supposed to be a red arrow. So we'll put a red arrow right there. And you can see what happens after that. Pretty big drop. It falls from the 160s down into 2000 area, 2016, 2018. So far so good? Okay, cool. Because when you start to understand that we're just redividing these cycles over and over again, now you'll understand why this part of it gets really interesting. Okay? So let me take this up right here. And stand by. Okay. Ninja 8 is kind of glitchy. And it doesn't like when you draw stuff in the future, which is ironic because everything we do that works so well is in the future. So we've got the 150% and the 200% extensions off here to the right. And we have the primary third, the secondary third, and the third right here. We've broken that gap into thirds. So now, here's where I want to sort of drive down with you. We can take these can unlock that. We can take these blue lines that we just drew, and I'm going to break our primary third into secondary thirds again, and we'll put our arrows, right? So let me go ahead and lock this to our 150% extension, and then lock this to our primary third division, and we'll lock it. Now, remember, the last signal was a green dot, which means we have to use a red arrow next, right? Because color oscillates. So I'm going to put a red arrow right there. And the next signal after that becomes a green arrow right here. And this was a video that I left earlier in the YouTube videos section. You can go back and see that we actually predicted that move up, right? And you'll see what happened as a result of that prediction. It moved up another, I think we were looking for a 20 or a 50 point move. So in the case of this signal, I'm going to blow it up. I want you to see that it was a pattern 4. We have all these great patterns, right? And I've cataloged everything I've learned throughout the years for you to follow. And so the predecessor to the pattern 5 was the pattern 4. And if we see a signal that looks like this, where we have a prior swing low, a retracement, and then a crushing of that low, where the selling pressure signal, the candle to the left or the candle to the right, if either one of those three candles are a new low, then we assign a green arrow or an exhaustion reversal signal to those bars. So if you come over here, you'll see that this is a pattern 4, and that candle number 1 and candle number 2 are in fact lower lows. So we'll go ahead and lock this too. So we were expecting a retracement up at March 22nd because of something that happened in 2008 and 2014. 3 years later. And then we were expecting a surge on July 12th. Now, everybody good so far? Okay. So we've divided the 150 and the 200 into secondary thirds. But we don't have to stop here. Remember, one of the laws that we talked about earlier was this idea, I don't remember where it ended up, was this idea of, must be up higher somewhere, all that text that we drew. It was the idea that we can cut these boxes infinitely smaller. And that's just the way time works. So I'm going to do that with you, this exercise with you one last time, and show you what I mean. Let's just make sure everything jihad's over here. And Ninja isn't doing anything squirrely. Okay, still good. There's another lesson that I want you to learn too. Remember how I said the red dots behave in an uptrend? I want you to take a look at this one. And do you see how there was a consolidation here? And then a retrace to the candle, or a retrace to the red dot. In this case, it's a red arrow. Does that remind you at all of what happened at the other places that occurred? For example, here. It's a larger, longer version of it, but can you see that consolidation, the return to it, and then the takeaway? So it happened there once. Here, it never broke above the red dot and drove straight down. Consolidation with a drop down. Here it did the same thing, a drop down. And now on this one, it's another red dot, and it never closes above until it breaks away here by the green dot. So it's a rare occurrence, but I want you to see when it does happen, when we get to a selling pressure signal, if it consolidates, and this is the only other time it happens since the solar max, it consolidates, breaks out, and comes back to the selling pressure cycle. If I take these secondary thirds, here's where things get really interesting. As though they weren't interesting yet, right? I'm going to take these time extensions that I've got, and I'm going to develop them out one final time, maybe two final times. So let's come in here, edit the price levels, and the only thing we're going to do on these is just make them one line thick. So you see how they're super thin now? I'll take this and lock it. So if the signal is green, the next signal is what? Red. We'll just leave the arrow pointing down here. I don't know why it's white. If that signal is pointing down, the next signal is what? Pointing up. Go ahead and change that to red. I want to keep it weird. Okay, so we split this into thirds. Remember that pattern that I was telling you about a second ago, how it consolidates, breaks out, and retraces to it? Well, check it out. It consolidates, breaks out, and retouches it. This is a time-based pattern. These patterns occur all the time if you know what times to look for them. So I want you to be mindful of that because we're coming into that, remember, in October. Okay, so green, red, green, red. Green is over here. Let's take this now, copy it, and paste this one. And this is our third split. So we're going to split what we split again and then again. We'll lock it. So it goes from red to what now? Red to green. That's right. To what next? To red. Up here. Are you starting to see that there's a consistency to the behavior at these pattern dates? That the moves up and down are consistently occurring when we arrive at those times. So down, consolidation, punch through, retrace, go. Up, away it goes. Pattern 4 signal here, it ends up going back and forth, punches out. Green, it comes up, hits it, goes up. Red consolidates and drops down slowly. Green, it comes up. Okay, now, whatever you do to one, you can do to the other, right? So we'll copy this set of lines, and we're going to put it over here. That's pretty close. When you're dividing lines like this, sometimes it's off because it's in the middle of 2 days. So I'm going to get it as close as I can get it and lock this one. Okay. So, first question, looking at this chart, if the last signal was green, what's the next signal coming up? The next signal coming up is red. So when we look at these lines, the thinnest lines that we've drawn, green, red, green, red, green, red, green. One of the things that I see, this is just me, and I look at this stuff quite often, but I still make mistakes, or I still miss things. But one of the things I'm seeing is a potential reproduction of this pattern here, up here. And here's what I mean by that. We had a green dot. It went up, had a double high, and then it pulled down into the next red signal. Okay. Over here, look. We had a green, a double top, and now it's pulling down into the next red signal. For this to qualify the same way this one did over here, the low, the day before the signal, the day of the signal, or the day after the signal, has to be below, or the lowest low of these moves down. Okay? So if this pattern is going to repeat here, that is to say we have a pattern 4 at the next major swing day here, then we have to have a lower low 2 days before, the day before, the day of, or the day after that next date. So if you have the flux solar cycle indicator, you'll be able to watch for that because you'll know exactly what date that is. So let's come in here and take those construction lines off. All right, so we have two elements of predictions. Number one, we have the big fall here. Number two, we have the small fall here, or what could be a reversal back up. And we also know this magnet line here is extremely important, this 42, 43 area. So you're going to see a lot of action around that. Pushes away and retraces to, pushes below and retraces back to that level, unfortunately. We can also if we felt really, really, really froggy, we could copy this and we could paste it, unlock it, and now we can take these little bitty lines and we can split these sections into smaller thirds. Okay, here's what I mean by that. Remember, I said you can keep cutting if you understand the way the laws of time and cause and effect work. So we can come back in here, and for this I'll use a diamond. Green, red, we'll keep the spacing similar, right? Green, red, and then over here, green. So if we use the technique, we'll lock it there. The micro moves are evident inside, so that's the fourth split down. Primary, secondary, tertiary, and then a quadrature, the fourth split of the 150 to the 200% extension. And I can do the same thing over here, right? It goes red, and we'll do green. And this is going to be important in a second. Green. I've done this in the previous videos too. We'll keep the gap the same. And then red, right? Which would be this day right there. So that kind of blows my mind, because these are moves that are occurring at these splits because of a date in 2008 and 2014 that were related to the sun and the number of black spots on its surface. Nobody talks about this. Banks don't talk about it. The Fed chairman doesn't talk about it. But it has such a profound effect. It has such a profound effect on everything in our world. I think they like that we don't pay attention to it. I think they like knowing how we're going to behave in reaction to our environmental conditions. I think they like how they know we're going to hate each other a lot in certain periods of time, and will be prone to invest heavily in certain periods of time. And they kind of like knowing us, like you might know how your kid behaves. You know your kid is a certain way when they're grumpy or hungry or tired, and you know a kid who behaves a certain way when they're in a good mood. I don't think anyone wants to talk about this, because if they did, traders would take advantage of these fluctuations in our environmental conditions, right? So again, all I'm doing is just sort of moving that pizza cutter here back and forth along the way and putting those signals at the final sets of thirds. So right there it would have been on that day, and then on this day. And you'll see that without me doing anything but following the laws that we started out with when we started, these highs and lows are coming in at the exact highs and lows, or pretty darn close to it. So we'll go ahead and lock this dot here. I'm going to copy and paste a couple of these so I can use them, and I'll lock this one here. We'll come back over one more time. There's our third. I'll put the red arrow here. It was a breakthrough, one of the only ones that didn't initially obey. And then we get to take one of these green ones that we stored and put it just to the left of the line, and you can see what happened there. So lock, and then lock. One left move right here, red, green, and then red again. We'll keep it the same spacing. And then finally over here off the 150, green, red, and then green over here. Okay, so we'll lock those to the chart so they don't move around the crazy ninja insanity. Alright, so we've got triangles on the minor cycles, diamonds on the ultra fine cycles, but now look, we're moving into the future here, right? So I'm gonna slide this over and check this crap out. The last signal was a green arrow. You know how the laws work at this point, right? That means the next diamond is going to be what? Red on the bar to the left of the line. Keep the spacing around the same. And there's red. The next candle is green, or a green diamond. Now check this out. Remember what I said? If the candle to the left of the candle of, or the candle to the right of a green buying pressure signal is a higher high, what do we assign to that signal? Okay, let's go back and look at the guidebook. Okay, so if the candle to the left of, the candle of, or the candle to the right of, if any one of those are a higher high, we have to give them a red exhaustion arrow. I'll use a magenta one here so we know what's up, but only one of these three candles broke the prior swing high, or was a higher high, and it's this one right here. These are the patterns I teach every week that I've taught for a year and given out a book describing for longer than that. And these are signals based off of the number of spots on the sun and the highs and lows of those cycles from 2008 and 14. So right here is a pattern 5. Okay, how long should this cycle go down for? Well, we haven't seen too many 5s, right? In fact, the last time we saw one of those was back over here. Remember, we've only seen one since the solar max. And I'm going to find it. Green, red, green, red, green, right here. So the last time we had a pattern 5 was this Jimmy Jobby right here. So let's go ahead and put a 5 just so you know what that pattern looked like. Okay, and what they'll do is they'll run the high to get retail traders into that last swing before they pull back and they exhaust. And so you can imagine that this measurement now is important to us. And so the very first place it goes before it retraces is $35. The second place it goes before it pulls back is $60. The third place it went was $74. So 35, 60, and 75. Ready? 35, 60, and 75. Let's see where 35 is. We passed 35, right? Let me show you 60. We'll do 35. $35, 60. So let me draw some lines here. 35 was here. 60 is here. And then 75 is somewhere around here. Okay, so these are the levels. The last time we had a pattern 5 that we had a bounce. So this level right here on the ES 24, 29, 50 area is pretty important to the market right now because there might be a substantial retracement. But remember, I said by the time we get to this next signal, which should be a red triangle down, if it's a pattern 4, it has to be a lower low. So if the lower low isn't in yet, I'm suggesting that we may be as low as 24, 14, 50 by the time we get to this next red signal. Okay, again, that's just the way when the market gets into a range or when the market is about to establish a range, I will almost always see the following pattern occur. I will see the market run up into a pattern 5 with a green dot up here. And then guys, ladies, I'll see it run down to the bottom of the range with a pattern 4 and a red dot here. And then they'll kind of hover around a midpoint, and then the extremes will kind of hover on the fringe. So this pattern is called a back-to-back inversion pattern. And if that were to be the case here, one of the things that I would suggest we look at, if they moved all the way from the high here, there's the high of that pattern 5 move. Do you see how it's the size of this block away from that line that we started out with? Green line, red line, 100% of the extension. Well, in theory, they could go as low as the bottom of this box and oscillate back and forth to that 100% line at 44, 42. So that low could be 23.9750. Okay, I'm not sure looking at it, but my guess is if they punched this high away from that 100% line, there's a very good reality we could be anywhere from 414 to just below 2400 at the 395, 396 level. So if I were looking at this from an options standpoint, I would be looking for options to buy anywhere between a 414 and a 395, 6, 7 level when it breaks that low. If it gets there in the next one, let's count it out. Ready? 1, 2, 3, 4, 5 days. Okay. There is, of course, the possibility that it pushes up here back into the high, in which case, if it's not a qualified pattern 4, we should see, if it's not another one of these signals with a lower low, when we get into that date, we should see another push down. So we'll see where we are. 1, 2, 3, 4. That's Thursday of next week. The close of the market of Thursday of next week. We are at a brand new low Wednesday or Thursday or Friday, in which case this thing will consolidate, punch out, and retrace, or we're back up into the highs here and looking for a drop down into the next third. Okay, but the way the pattern is forming right now, if it continues to drop down, the first retracement would have been here at the $60 drop point, and then the next retracement is down here at the $75 drop point at 414 area, 415. So in conclusion, well, there's actually one more layer to this. Do you remember how when we started we had the horizontal lines drawn out from the solar cycle maximum and then the solar cycle minimum way back over here? Okay, so those lines we knew turned out to be bounces and touches where price came back and touched and moved away. That was one of the first laws of time resistance. When you start drawing these minor cycles like we have, you can enforce that rule. Let me show you what I mean. Ready? And this is just going to be real crude. I'm going to lock these lines here real quick just to make sure they don't move on me. And if they do move on me, shame on you, Ninja. Okay, we'll keep these locked too. I'm actually building a workspace for a customer while I'm doing this with you. So now, remember, every important time cycle has a subsequent resistance level that holds it. So right here, the close of that candle, and I'm just eyeballing it here. If you want to go back and verify this on your own, just copy the candles that I did it on and you'll see this for yourself. I'm going to do a green and I'm going to make it 1 and a dot, just like that. Okay, so everywhere there's a green dot at the close of that candle, I'm going to put one of these lines. In the area that we're in. And I want you to notice the reaction of price to those levels. And then vice versa. I'm going to take everywhere there's a red dot and I'm going to put a red line. And I want you to notice how price reacts to those levels. And there are no coincidences in the markets in relation to time. So let me come here and just delete some of these things. Because if you make it too congested, you can't see the stuff you're trying to teach, right? So in regards to that, you'll see there are no other relevant levels to where we are right now. You have the major level, this guy right here. That's the big kahuna. That's 100% extension of the major cycle low and the major cycle high. I almost don't know what color to make it. It needs to be like a neutral color. Maybe we'll just make it silver. Okay, so there's that, and you can see the reaction of price to that line. And right here, best I can tell, that's 21, what I say, 42, 42.50. Okay, Now I'm going to make these almost black. Slate clay, menu dark gray. Because these are the, and we can get rid of this one because we've already gone past it. These are the levels when we saw pattern 5 last time that the market retraced to. So we want to pay attention to see which one the banks pick. And so far they've retraced to that 2430 level, but there are also 2 time cycle marker lines right there. So there's a lot of support for the market here. The next line down though is here at 2390. Remember when I first told you that if there's a pattern 5, they're usually going into a range, and then I thought the range would be split on either side of this major point right here. Well, if you copy and paste that, do you see how it brings us awfully close to that green line right here? So this area again, and I'll just put it right here, and I'll make it 60% opacity, and we'll change the color to green. This is where I think the bottom of the zone is going to be. There we go. Sweet. Okay. So all the support and resistance lines that are known are here. We expect consolidation between these two sets of line. You have 4 lines that have a gap right now, basically from 30 to 40. So the ES is expected to have sort of this 10-point back and forth consolidation in there. There are 2 other very important resistance levels, and I'll just name them out for you before we end the video, and you will see bounces off of these. You have one at 24, the close of that bar up here, 24.74 quarter. You have another one here at 24.58 quarter. Then you have the major one at 24.42 half. The next one down is 24.40. The next one below that is 24.38.50. Then you have 24.32 quarter, 24.31 half. Our drop, the big drop where we expect the 70, I think it was 75 points, was 24.13.50 from the high. And then you have this critical zone where I think the bottom of the congestion will occur, 23.95 quarter to 23.90.75. In between those 2 cycle lines, you're going to have a halfway point where there's some craziness kicking in. And that's 24.11 quarter, 24.11, 24.11 quarter, which would also be where that retracement level we were expecting from the pattern 5 earlier would be. Okay, so I'm going to leave this line on the chart for my customers when they go back and do their research. This is the universe that I live in every day and am teaching people to use every day. As you see here, looking left, all of the signals on the chart have nothing to do with anything that happened in the markets, right? They're based off of the number of spots on the sun, the max and min values of those recorded and then projected forward into the future. And when you think about how crazy it is that everything aligns the way that it has, and you're seeing these cycles occur where they do and the market's reacting the way that they are, it should really start to make you question how much of your life do you want to devote to lagging indicators, volume spread analysis, Fibonacci stuff, and order flow analysis, and all of the latest fads, right? This has been working for centuries. Over 100 years ago, this was the method that these guys were using. This is what I believe the banks are keying in on. These are the cycles that are based off of things so much larger than what you hear on the news and what your guru tells you in the trading room. And I hope that it inspires confidence when you come to our website and you see the histograms that are being formed and you see the projections of those time cycle markers. I want you to understand this isn't black box curve fit stuff. These are signals that are based off of fundamental ground level market affecting factors. And it's my hope that I can keep teaching you how to use these, and you can gain a confidence such that we can use these tools that the enemy, the banks, are using against us, against them. And ultimately, that's why I do what I do. I want you to learn to develop the skills that they have, be ready when they move, and to stop when they stop. I'm Michael Leidick with BackToTheFutureTrading.com on behalf of our entire staff. I hope this video was good for you. Please subscribe, like, comment below. Tell me if you learned anything from the video and if there are other markets that you'd like to see me analyze. Also, look in the video description for links to our weekly webinars as well as the materials I mentioned throughout this video. Take care, everyone.